Well, good morning, everyone. Thomas Montgomery here. It's a beautiful Wednesday morning. Today is February 4th, 2026. We get together most weekday mornings at 8 o'clock Central to talk about strategies, tips, techniques, really addressing how small businesses can get capital to start or grow using a unique, a legal, a proven model, guaranteed model called SPEs. Some of you prefer to call it an SPV. SPE standing for Special Purpose Entity, SPV meaning Special Purpose Vehicle, means one and the same. So here in the background, we have our website, spefunding.com, and that's an important resource site because if you run into someone that's looking for capital to start or grow a business, there's some really valuable information on the website, including this three-step process. Everything's designed to be ultimately as transparent as ultimately possible. So in the past, sometimes we'd have clients that would enroll and they'd say, well, no one told me that, or I didn't know that, or I'm surprised by that. We never want that to happen again. So our approach is to provide complete transparency. And so we do that through really four on-demand trainings. The first of which is under step one, which is right here. The learning objectives are stated. The second of which is here. The learning objectives are stated. And for those people that have a thirst, a quench for more knowledge to understand more of the intricacies, we've even added two bonus trainings. Any reasonably competent, normal person, after watching those four video trainings, should be able to come to a conclusion. Is this the right solution to their problem? The problem is they want money to start or grow a business. The SPE model is one alternative. Maybe it's not the right fit, but it is a unique, legal, effective approach that we educate them. So often when people call in and they're too busy, they don't really want to spend any time learning about the structure. They just want the Cliff Notes version, the summary version. And we've started to take a really hard line to say no. If you don't have enough time to learn how this advanced model works, that will guarantee you at least $250,000 in 30 days, you're not a fit. So the education, the financial literacy is important because a lot of people, they don't have the background that you and I have. They don't know about these advanced strategies, topics, and structures. So it starts with building financial literacy, and then ultimately it's real easy to participate. For those of you that might be interested in getting paid to help others, we call that our affiliate program, free and easy. The link is right here, and there's a training video for it. So with that's a bit of housekeeping. What I want to do though is focus on our topic today, which sounds a bit ambitious, but I know probably half of you will kind of disconnect and not pay attention to today's topic. But those of you that can see things on a larger scale, you're looking at more of a strategic answer to what you're doing for generating wealth. I think this will be immensely interesting to you. So, our topic, without it trying to be funny or adolescent, is building business empires using SPEs. So give me a few minutes to go through this, and then you can tell me what your feedback is. So the SPE is, of course, what we've been talking about that's on the website. But the bottom line is an SPE, short for special purpose entity, is a legal entity created for a specific purpose, usually to isolate financial risk and manage assets without affecting the parent company's balance sheet. In our world, what we talk about is using them to access large amounts of business funding. So that's what we've been talking about. That's what's addressed in these trainings. Nothing new there. But now we're going to take it a layer deeper. We're going to look at some more strategic options of how to leverage SPEs. So continuing on. In our model, we set up SPEs as management consulting firms. We set up exactly one per county, no more, no less, one per county, per state. And we call them branch offices because what you and I know, and again, a lot of people don't get this, but what you and I know is One of the key elements of getting a business loan is the structure of the loan package. What is it that we're asking for? How much money? What are we telling them we're going to use it for? And do we have the support documentation around it where the lender will approve the loan? That's instrumental. Now, I know that if those of you that are affiliates, distribution partners, you'll often run into people, they're not thinking at that high a level. They're just saying, I just need money. No, 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 no. I just need money. Well, we can go get personal loans, but if we're trying to get business loans, especially larger 6 or 7 figure business loans, there needs to be a more sophisticated approach, and the loan structure is crucial. The SPE model is one type of loan structure. So when we use the SPE model as we have defined, there's certainly no out-of-pocket cost. Now, does that mean it's free? No, sir. No, ma'am. We are not saying that we run a very profitable business by doing free things. That is not true. But what we are saying is that instead of paying out of pocket, that participants can get an SPE, leverage it for a capital raise, and instead of paying out of pocket, they pay out of the financing raised. So that's an important differentiation there. So as we stated, each SPE, which is set up as a branch office, is going to get at least $250,000 of capital raise. We promise it, we guarantee it, it's in writing, as well, not in lieu of, but as well as 250,000 of first month income. This is a huge differentiator. So when you think about the 3 C's, what does it take to get business funding, credit, collateral, and capacity? Capacity means cash flow. A lot of people that have come to us in the past, good people, needed money, wanted money, but they didn't have the third C, the capacity. And so, strangely enough, lenders would like to see that the borrowers can afford to repay back the debt. Now, we can accomplish that partially through creating financial projections, telling them this is what we'll do with the money once we get it and how we'll be able to afford to pay it back later. And that's relevant, especially for a business like a restaurant, right? With a restaurant, you don't have any revenue now. You're either all in or you're all out, right? We need the physical space, we need the equipment, we need the furniture, we need the inventory, the food, we need the staff. So some businesses are just off or on, like a restaurant, like a hotel, where others that are more service oriented, it's much better for us to show the lender some proof of life, some proof of concept that the business actually is open, that we're not just here talking about it. So that's one of the really innovative things that we do with the SPEs that we build is we provide 250,000 of first month income to overcome that concern by the lender of, well, is this a real business? Is it going to really have any clients? Is it going to really make any money? Now, I didn't mean to do that. The most important thing so far that we've talked about is this bullet here, and we've not discussed this enough. When we're setting up these SPEs, otherwise known as branch offices, they can either be wholly owned or they can be set up as a joint venture. So that's what we're going to build in today of how we can build joint venture SPEs whereby you own an equity stake in multiple SPEs without any out-of-pocket cost. So let's go through this concept. We've defined what an SPE is, built off the basic information that's on the website. But now let's define what a business empire is, and then we'll seek to connect the two concepts together. So, a business empire refers to a large and successful organization or conglomerate that consists of multiple businesses or enterprises under single ownership. You. Often characterized by significant financial success and extensive market influence. So, do I think that all of you want to run a business empire? No, I understand that. Do I think some of you do? I know some of you do because those have come up. That topic has come up in a number of side discussions of how you can leverage this model on a much larger scale. So that's what we're going to dig into and explore today. Furthermore, what is a business empire? Let's break it down more so. So a business empire typically has three primary characteristics, one of which is that we have several businesses operating in different markets. And that's important because if all we do is one thing in one place, number one, we're going to have some limits of how much we can grow, but it certainly does not allow us to diversify our risk. Because if you had a tornado come through the one town you're operating in, your business probably will cease to exist or cease to operate for a while. However, if we have multiple offices, multiple businesses in multiple markets, that's called diversification and risk management. The example I often use close to home, which maybe is irrelevant to you, but one of my neighbors owns fast food restaurants. And the restaurants that he owns are franchises with Sonic, Sonic. You might have seen them. They're kind of mainly the drive-up restaurants. So they're lower cost than a McDonald's or a Burger King, but still about $1 million to get each one up and going. He owns multiple Sonics. Now, are they all in one town? Of course not, because there's not enough demand in one town. But he owns multiple Sonics in multiple towns across the geographic area. So that's an example of having multiple ventures. They're the same business model, but it's replicated in different markets. Now, does he go to work every day at all of his Sonic restaurants? Well, that'd be impossible, right? Because he owns whatever it is, six, eight, 10 of them. So he owns them, but that doesn't mean that he works at them. But if we're going to build a business empire, we should first consider that we're going to need multiple ventures, and ideally, we would have them in different markets. Secondly, we don't want to just have a business to say that we have a business. And so often we see that. We see entrepreneurs and they feel kind of proud just the fact that they started a business. But the point of a business is to make profit, to generate profit. And that's what we need to help these individuals do. And that's the concept of the business empire, is that we're having financial success. We have substantial revenue and profit margins. A bunch of broke businesses does not create an empire, right? We need businesses that are producing profit, building our wealth. And then the third variable or element of a business empire is market influence. So what we're doing has influence over the market, over consumer behavior. It's important, it's relevant, it's impacting other people's lives. Some people call this disruptive. And that's absolutely our model with the SPEs, with the branch offices. And we went through this yesterday. We did a review of part of the feasibility studies that we do. The one we featured yesterday was for Austin, Texas, Travis County, Texas. And we dug into what's the market potential look like in just one county? How many businesses are there? How many small businesses are there? How many home-based businesses are there? How many new businesses are forming each month, each year that need capital? So when we think about building a business empire, it is helpful to look at it in light of having multiple ventures, which we can accomplish through the joint venture model, which we're going to describe in a moment, having significant financial success. A broke business is not a good business. And then lastly, market influence. So how can we connect these two concepts? What can we do to go build a business empire using these SPEs, special purpose entities? Well, the first thing that we're going to do is called step one. Pretty good place to start. We're going to use other people's money and we're going to avoid risk to create passive income. Well, that's a loaded statement right there, isn't it? That's pretty powerful because most financial advisors, which I'm not one, would tell you it's very important to create passive income. If the only way that you make money is working, it's very hard to create wealth because there's so many hours in the day. Illness issues can come up. You might not want to work. You might want a vacation. So we need a business model, ideally, that's not built upon you going and working for an hour to getting an hour of pay. We need to create passive income, and business ownership, of course, is designed to do that. We want to avoid risk. There's lots of things that you could do that's very risky. We don't subscribe to that. We want to avoid risk. And this sounds kind of whimsical, but it's not meant to be. You don't have to put your own money into a business. Some people say, well, it takes money to make money. That's only if you don't know how to do it otherwise. So, step one of building a business empire through an SPE is using other people's money while avoiding risk to create passive income. So, let's dig into that. So as we suggested here, this is what they call foreshadowing, right? We brought up this concept early on, and now we're going to dig into it. Some of you have been very successful in educating others about how to raise capital through SPEs. You're bringing in clients, they're enrolling, they're getting money, and everyone's getting paid. That's fine. But did you know that instead of just bringing clients in, you could approach it with a different mindset and form these SPEs, these branch offices with them and make it a joint venture between you and them? So that's the point here. You can create joint venture relationships with others. Now, I could role play it out, and I guess I'll give you a quick example, but it's really how you want to approach it. But let's say that you wanted to fill the Dade County, Florida, where Miami is. I want to get the SPE set up, the branch office in Miami, Florida. Now, I don't want to spend any of my time. I don't want to spend any of my money, but I want to be able to create passive income from it. So what would I do? I would pretend I'm a headhunter, right? I'm searching for someone that I'm going to partner with in Miami-Dade County, Florida, that we're going to open an SPE, a branch office. They're going to run it, they're going to do the work, but we're going to own it together. Now, what does that mean? Do you own it 50-50, 51-49, 80-20, 90-10? That's really up to you. But there's some sort of joint ownership because there's power of ownership in a business. If all you are is an employee, then you have no ownership and you're kind of disposable. If you are, if you're a contractor, then you can be let go. You don't have that equity building potential. You want to be, in this model at least, a partial owner of every one of these branch offices. So with that, we can create joint ventures between you and that person that you have selected that's going to run, for example, that Miami-Dade County office. So they're going to go to work each day. They're going to run the office. You can give them whatever title you want. They're the executive director, the directing manager, whatever you want. You are an equity owner and you serve in a leadership role. Because if you're bogged down with doing all the work, running that branch office in Miami, Florida, you're not going to have enough time to go expand into other markets. You'll be busy working. So, with that being said, the concept is to bring in a joint venture partner, let them run the branch, but you share in equity ownership, whatever split that you and they decide. So, what happens from that? You get profit distributions. And so the way that you would normally write it up is that each week you would account for the money coming into the branch office, the SPE, and then do a distribution. So each week you're getting a profit distribution from an SPE, a branch office that you facilitated, that you own part of. You didn't have to pay anything for it. You didn't have to use your credit or your assets, but you are a joint venture owner. Do you see that concept? Anyone have questions, comments, concerns on that? So it really isn't that much different than if you've been active in trying to find clients that want money, that need money, and you're educating them about the SPE model. It's 90% the same. The other variance, the 10%, is just, hey, by the way, we're going to be working together in Miami-Dade County, and I'll be able to help you because I've got the background, the experience. You'll own it. You'll have an equity interest. It's a great proposition to people, especially if they're early into entrepreneurialism. They're going to feel like they have that built-in coach that's helping them. You're the coach, but instead of being paid as a coach, you have an equity interest as an owner. So step one is covered there. Step two, we want to leverage, still want to continue to leverage other people's money, but now we're going to leverage the bank's money. So we can inject capital into the SPE, into the branch office, and grow more rapidly. Going back to yesterday's training where we broke down Austin, Texas, Travis County, Texas, we looked at just how many banks there were, how many bank branches technically there were in that territory. We would need at least one full-time person, maybe two full-time people just to go out and work with the bankers and handle the referrals from the banks in that one given area. So if we really wanted an SPE, a branch office, to reach its potential, we're going to need some staff. Do you have to do that? No. But if you wanted to optimize income, we need to have staff to go out and reach out into the community. Are you willing to do it? Maybe. Do you have enough time to spend 20 hours a day? Probably not. Banks aren't even open at night. So we want to leverage business loans to be able to fund our business. So it's not coming out of your pocket. It's not your money going into it. We start by using the joint venture partner's money to get it started. And then we're going to grow the business using bank financing, which we promise we deliver. We've already talked about that. We can get at least 250,000 per branch, per SPE. How much bank funding that we want, we know we guarantee the 250, but it's really based upon what you and your team, your leadership team wants. But the example I gave is if we're going to really penetrate the market area, we're going to need staff. And so, of course, we're going to need to pay that staff. Now, the staff will generate income to the branch, to the SP, and be able to pay for itself, but we need the initial working capital. The nice thing is that when we're doing the JV approach, it's your JV partner that's serving as the personal guarantor for this business financing, if that's even needed. It may not be needed. Therefore, you're not putting any money or any PGs into this model. You're simply in an ownership equity position, peeling off the profits and building your net worth. So that's step two. Step three is we want to scale up, keeping in mind what it takes to make a business empire. Now, could we just do this one time in one market? Of course. But if we're trying to build a business empire, which is the topic today, we need to scale. We need to keep going. So, step three, there's only four steps. Step three is we know in the first month of every SPE, of every branch office, we're guaranteeing a minimum of 250,000. How does that happen? Too good to be true? No, if you go back to the training, but just in summary, for the first month of each SPE, we provide the contracted clients for free. It's part of the deal. That's not really our role in months 2, 3, 4, 5, 6, and so forth. But for the first month, we're going to provide each SPE branch office 25 contracted clients that have each promised to pay the SPE $10,000. So 25 times 10 is 250,000. That's where that's coming from. So that's not a cap, but that is the guaranteed first month income. Good start. And for the reasons we stated earlier, it sure is helpful to have money coming in before we go apply for a big business loan because the lenders see that we have a credible business. So we will scale up by using the business loan funding so we can continue to grow month 2 and on. So if you wanted to open an SPE, a branch office, and just operate it for month 1, where we're giving you the clients and not operate it month 2 going forward, that's your option. Doesn't make a lot of sense, but that is your option. Here, what we're encouraging you to do is not just take the free money, but literally continue to run the branch, the SPE, using your joint venture partner in month 2 going forward. That's the point there. So then our final, we can go ahead and make this larger so we can all see it better. Our final step, see if we can make this a bit larger. Our final step is our exit strategy. As most business advisors, most business coaches would advise, which I'm not either of those, you want to start a business with the end in mind. What's your end goal? Is it to pass it down to your children or to friends or family? Is it to grow it and sell it at its peak? That's your choice. We're going to propose this, and let me describe. So when you are ready to cash out, which could be in month two, could be month 12, month 102, you control that. Then what would happen is you can sell your equity interest. So if you're following this model, what have we said? We're out opening multiple SPEs, branch offices in multiple markets. You've got a JV partner in each. You're determining how much they own, how much you own, but you do own some of it. Otherwise, it wouldn't be a JV. And by you having ownership in it, you can sell that. So let's just do a real quick projection of how that would look. So businesses typically sell for a multiple of earnings, and different businesses and different industries are valued differently. But a good approximation would be a business would often sell for 4 times its annual earnings. That's a good general number. If you think that's too high or too low, you can alter your assumptions. But that's a good, easy approximation. So let's look at that on a single branch off a model. So we know we're going to bring 250,000 in the first month. We promise it's part of the deal. If you want us to continue to provide in that capacity, we can, but frankly, you and your staff should be able to keep the momentum going. But regardless, let's just assume that we don't grow, we just stay steady at 250,000 a month coming into the SPE, the branch, and we do that over a year, as we're looking at on an annualized basis. That would give us 3 million of annual earnings per SPE. Now, you could replicate this multiple times, and if you're going to build a business empire, you're actually supposed to do it multiple times, not just one time. But theoretically, let's just look at it on a one case calculation. So you're a JV partner in one SPE, one branch office. It performs reasonably, nothing exceptional, 3 million of annual income in year one. If we follow this projection of how to calculate the valuation of the business, it's going to be worth around $3 million. So if the multiple is 4, then 3 million times 4 means the valuation of the business would be about 12 million. So again, in case I confused you or confused myself, we project the branch to make 3 million a year in income. The way that we value normally is 4 times earnings. So 1 year earning times 4 brings us to $12 million. So that's a good roundabout approximation of what each SPE branch office would be worth by following the model. Now, you own part of this. How much do you own? I don't know. Because remember, we said you could do 50-50, 51-49, 90-10, 80-20. That's up to you. That's really your JV agreement between you and your JV partner. But let's just say that you did 50-50 for simple math, and you did this for 1 year. You wanted to sell out. You're ready to take your money and move on to other things. Well, if the business is worth 12 million and you own half of it, it's worth 6 million. So you could literally say, I'm walking away from this. I want my 6 million. You could either sell it. Normally you would sell it to your JV partner, but you could sell it to a third party. There's a whole market for buying and selling businesses. But you're looking at walking away in this example, 6 million per SPE. So you put no money into it. You didn't have to pledge any of your credit. You didn't have to have incur any risk. You brought in a JV partner that did the work. You're providing the leadership and the counsel. You're getting weekly profit distributions, and using these assumptions, you're able to walk away after 1 year and walk away with around $6 million. So, what is your feedback? What is your constructive criticism on this model? Because we've got some really big hitters on here, and many of you already have business empires or you're already building business empires. But we also have some of you that are just not to that point yet. So here we've attempted to create a one-page roadmap of how anyone with no financial investment, no financial risk can build a business empire? What is your feedback? And if you have constructive criticism, I'm fine with it. All right, Gilbert brings up a good point. So the primary assumption or requirement for this to work is getting a JV partner. Otherwise, you could own 100% of it, and that would be okay. And if you owned 100% of it, then you would have full valuation. So that's not a bad scenario. But without a JV partner, now it's you running it, it's you getting everything set up and you being potentially the personal guarantor. So that's not a bad scenario. It's just not quite as passive as what we're promoting. But you're right, Gilbert. So, worst case scenario, you do this, you don't get a JV partner, but now you get all the profits and you get all of the exit money. So it's not a lose situation, but it's not quite as hands off as what we're proposing. But Gilbert's right. If you're going to implement this model, you will need to have a JV partner per market. And that would be what you're really bringing to the table. We've got the model. We'll do the work. We'll do the training. We provide the back office. We've got the system. But what you would need to do is bring the JV partner. Well, what do you do with them? You're going to bring them in to spefunding.com, right? It's right here. It was on the website we talked about beginning. Have them watch the videos so they know what we're doing, so there's no lack of transparency. And then on step 3 over there, have them set up an SPE, have them enroll. And from that, then there's just one extra step. That one extra step is you setting up your JV relationship with them. And you control that. Again, is it 50-50, 51-49, 90-10, 80-20? That's up to you. And we can advise you on that, but it's up to you and them. But essentially, implementing this whole model is not different than just really being an affiliate and going out and creating awareness and bringing people in. It's just if you do it this way, you have an equity interest in each of these, and that creates massively more income. It's creating the profit distributions on a weekly or monthly basis, however you want to do it. You're building your wealth, and then you can have an exit strategy, as we've shown here, that could bring you between 6 and 12 million per SPE. Questions, comments, concerns? All right. Chris asked how many times he could do this. Well, there are no minimums or maximums in building a business empire. You could try this once and see if you like it. Pretty sure you'd like it, but you could do it multiple times. We have one gentleman, I won't mention his name. He's on our Zoom right now. There's a state in the Northeast United States. He's planning on doing this for every county in one specific state. So he's wanting to really manage that state. So you could divide it like that, or you could do regions, or you could just say, hey, I'd love to have something in South Florida, something in Southern California, something in the Northeast. I mean, it's up to you. What market you want to do it in is up to you. But it's a great model that I wanted you to be familiar with. I encourage you to consider it because if all you do is bring people in as an affiliate, you're going to get paid. And it's good pay for affiliate pay, but that does not compare at all to having a portfolio of businesses that you're an owner of. You may not be 100% owner, but I'm suggesting you may not want to be 100% owner. Be a minority owner, have some partial ownership, have a partner that does all the work, and you're able to just essentially provide leadership, guidance, counseling, pull profits out, and then pull your equity out when you're ready to exit. So again, it all starts with going to spefunding.com, watch the training so you or they or whomever understands. Step 3 is to get the SPE set up, and we'll take it from there. Thanks, everyone. See you back tomorrow morning. Have a great day.